Garsworld.com, The Future of Trading, presents you with Devin's Spike Theory by Devin Crandall. Okay, Devin's Spike Theory definition is when a stock spikes to the components of Devin's Spike filter in real-time formula stock screener stock vision power scan. The odds that it is going to continue going up aren't necessarily higher than the odds that it goes down or sideways. However, if the stock continues spiking, the odds that it continues to spike increase with time, and often you can achieve very nice percentage gains in an intraday trade. So it's very important you understand what this definition means. It means that Devin's Spike filter picks just about as many greens as reds. It picks just about as many winners as losers. However, when it picks a winner, it usually picks a really good winner, and that winner will register continuation spikes for long periods of time, and you can gain nice 2, 3, 4, 5, even 6 or 7% gains in an intraday trade. Mind you, this is hours. Within hours you can make these gains on a day trade. So it's a risk versus reward theory. You take a risk on a spiker, okay, and you're usually not going to win anything, but the reward will trump the risk over time, and the odds are generally in your favor over time according to Devin's Spike theory. Let me give you an example. Let's say stock A is coming up in real time on Stock Vision Power Scan, Devin's Spike filter. Now there's generally three things that are going to happen. Either it's going to crash back down, it loses its spike, you get out and take your loss. It might grind sideways, at which point you pay your commissions and take the no gain. That ain't what we're looking for though. We're looking for a continuation spike. If stock A registers a continuation spike, it turns out that the odds that it does it again actually increase. Stocks that are spiking up continuously with time, consistently, tend to keep doing it in these intraday trades, especially in an up market. So if the stock continues spiking, you're now wondering, at which point do you take your gains? And this is one of the tricky parts. There's going to be a lot more education on this in the future. But if the stock decides to lose a spike or go back down, it's usually a good indicator to take your gains to that point. Or if the stock grinds sideways. Now mind you, this means the stock stops spiking. This also means that the stock will no longer appear in Devin's Spike filter. You might find that later in the day the stock will reappear in Devin's Spike filter and it'll start a new level of spiking. And this happens. I've seen 3 to 4 different levels of spikes on stocks in intraday charts. But what we really want, and what really happens quite often, is the stock continues spiking. It relentlessly. It spikes again and again, and it spikes again. Because according to Devin's Spike theory, if a stock is spiking to the components of that filter, and then it does it again, and it continues to spike, the odds that it continues to spike increase with time until it finally flattens out or goes back down, at which point you would take your gains. So it seems like a simple theory. You ride the spike to the top, get out at its peak. It's not as simple as it sounds. It involves some human intervention. I have to filter the graphs through my mind. Not every Devin spike is a good long. There are some that are good shorts. I'm working on figuring out how to differentiate the two in a graph view, especially the 2-minute candlestick view. So go and check out Devin's Spike filter in Stock Vision Power Scan. If you don't know what Stock Vision Power Scan is, go to garsworld.com, download our free 9-day trial. If you have any questions about the software, message me on Stock Vision Power Scan. My screen name is Devin. Thank you for watching.